A shocking revelation has just come to light. Proof that JP Morgan and Wall Street are carrying out a coordinated attack against Bitcoin, Strategy, and Michael Saylor. There's even talk here of a massive deep state speculative attack on Saylor and Strategy. The traditional banking system, Wall Street, and the like are completely freaking out here because Michael Saylor is indirectly attacking their business model. And now they have to try to defend the status quo here. We're going to look at all the facts. We're going to look at all the details. And I've already talked about this in other videos, that it's very, very likely this could be a coordinated attack. And now it really looks like we clearly have the evidence here. Retail investors are supposed to be shaken out of the market. Panic is supposed to be spread here. And you really need to see through all of this now. That's why this video is so important. Before we dive right in, guys, just take a second real quick. Hit the like button for me down below. Hit the back button for higher Bitcoin prices, for new all-time highs, and as a thank you, I'll show you this cool rock. And let's quickly take another look at what this was all about. So JP Morgan is warning that MicroStrategy is going to be delisted from the major global indices, basically just taken off. This is mainly coming from MSCI. This could lead to billions in Bitcoin being sold. Saylor himself also made a statement about it, saying that it's basically nonsense. And we'll also take a look in a moment at why JP Morgan is attacking MicroStrategy's Bitcoin strategy, because that actually makes a lot of sense. But here we now have proof of coordinated FUD, that is, false news against MicroStrategy. Like I said, it already seemed artificial. Here's the proof. Just look at the date of the news sources they're using today to try to stir up panic. October 10th. That means this panic report that just popped up a day ago about the MSCI exclusion, this panic report has actually been around for 42 days already. So by the time you see this video, it'll be 43 days since the tweet is from yesterday. So on October 10th, this document was already published. The market ignored it for 6 weeks. And now, after several days of losses in November, JP Morgan suddenly dug up the topic again, stoking fears of a possible delisting. They reheated a story that was already outdated just to speed up the sell-off. This isn't news, it's a coordinated attack. I also found this research from Zincs interesting, because they took a closer look at what's really going on here. They come to the conclusion that there's a 99% chance Strategy won't be delisted, simply because this delisting would also affect Capital B, Metaplanet, Mara, and so on, but that's not the main point. In fact, there's actually a list here where you can see all the companies that would be affected. American Bitcoin Corporation would also be affected here, the company managed by the Trumps. That means if this were to go through, Donald Trump would, in all likelihood, probably veto it or take some kind of action to stop it or do something about it. In other words, Donald Trump just wouldn't let it happen. He simply would not allow it to proceed or take effect under his watch. That's basically the conclusion here. You don't have to agree with it 100%, but the argument does make some sense. But now there's something even crazier coming up. Why is Wall Street, why is JP Morgan attacking us so much when it comes to Bitcoin? We all know Jamie Dimon's statements. He said it before, after all. Back in 2017, he called it a fraud. In 2021, during the annual meeting of the Institute of International Finance, he described Bitcoin as worthless. In 2023, at the World Economic Forum, he called Bitcoin an overvalued fraud. Here, he compares it to pet rocks. Then, in 2024, at the World Economic Forum in Davos, he doubles down, saying Bitcoin will achieve nothing, it's useless. He calls it, once again, a pet rock. That term doesn't really translate into German. Here, it's about money laundering, risks, illegal activities, and so on. And then came 2025. Then he reiterated that he's actually not a fan of it, but now they're also offering their own Bitcoin. And now something really, really interesting has happened. That means we're seeing a pivot at JP Morgan, but it's an involuntary pivot because they're realizing that Bitcoin is stronger here than our traditional banking system. And now, pay attention. What product did Strategies recently launch? STRC. What does STRC do? Yeah, it directly competes with traditional banking products. That means you put your money in a savings account, get maybe 1% interest, and that's it. What Saylor is offering with STRC is a savings account-like vehicle, except you don't get 1% here, you get 10%, sometimes even over 10%. And of course, that's direct competition for the banking industry. And that's why a lot of people now assume that JP Morgan's freaking out, because they see, aha, someone here has a much better product than we do. We can't compete with that, so we have to take out this competitor. To be fair, this is speculation, but it's pretty obvious. Here's another analyst who says STRC triggered the whole thing. It has successfully shaken up the banking savings sector here. Not attacked it, but scared it. And this could even drive the traditional banking sector into insolvency. Unless, of course, they turn to Bitcoin. But even if they do turn to Bitcoin, they can't compete with Saylor because Saylor has a monopoly position since he owns so much Bitcoin. And they'd first have to build up a massive Bitcoin balance sheet to be able to offer similar products here. And what I've just said here, which is just my own speculation, is also confirmed by Eric Trump in his statements. So it's not something I'm just pulling out of thin air. We're getting support from the most relevant players here in the US market. Listen very closely to what Eric Trump says here about Bitcoin and JP Morgan.
System. They have no leverage, they have no negotiation power, and they get feed to death. Crypto solves all of that. Blockchain solves all of that. There is nothing that can't be done on blockchain that JP Morgan Chase did, that Bank of America, that can't be done better, faster, cheaper, and more transparently. And I think that's a wonderful thing for humanity. I think that's a wonderful thing for the people of our country. And I think that's a wonderful thing in putting real checks and balances on the very people who weaponize the financial system against people that they didn't like for political reasons.
Really liked and actually enjoyed to do webinars quite a lot, in particular. And blockchain couldn't do it better than JP Morgan, Bank of America, and all the banks, folks. Bitcoin can make it easier, cheaper, faster, more efficient, and even more transparent. And now I've dug a little deeper here and found something really outrageous. Guys, this is gonna blow you away. Tyler Winklevoss is even talking here about Operation Chokepoint 3.0. So Operation Chokepoint 2.0 was basically the attack against all Bitcoin banks throughout the entire financial system. That means anyone who did anything with Bitcoin or crypto was targeted and attacked by the Biden administration. And now there's the next battle, Operation Chokepoint 3.0, where basically Bitcoin players and so on are being attacked by the traditional financial system, by Wall Street and so on. And now, just check out what this guy has uncovered.
Talking about some of the previous videos and the timing on JP Morgan, okay, and when they actually increased the margin requirement on MSTR.
This is about the timing of an increase in margin requirement, which in German simply means that the margin requirements at JP Morgan for MicroStrategy have been raised. That means, for example, in certain procurement accounts, you can trade on margin. That means you're not trading with your own money, but instead, for example, you put up stock values or your portfolio as collateral. It's kind of like a Lombard loan. Not exactly one-to-one, but something along those lines. So you use your own stocks as security. And in the past, strategy was just a normal vehicle. You could simply trade it. You could, for example, use strategy as collateral and then basically buy even more Bitcoin or sell other things for it. And now these margin requirements would be increased. Keep listening to find out how much they would be increased.
So let's look at that, right? So I have an email here from JP Morgan on July 7th, okay? That is when they did a firm-wide increase in the margin requirement for MSTR. Now, let's look at that, right? So we have a chart here, right? And I overlaid the vol on that chart. Let's look at July 7th, this line here, okay? Now, on July 7th, the 90-day vol was going down between June and July. The 60-day vol is going down between June and July and continues to trend down. Stock price is stable, goes up for a bit, but now look, as they put this firm-wide margin requirement increase on MSTR, it goes up, but then it pretty much precipitously goes down, right? People had to liquidate that security. Now, there is no risk model at that time that would have told JP Morgan that they should be increasing the margin requirement.
Explain now. What she didn't mention here is that the margin requirement was raised to 95%, which doesn't make any sense at all. Basically, overnight, I think, I don't know what the margin requirement was before, maybe 50% or so, then it was raised up to 95%. That means, basically, out of every 100 euros you have in strategy, only 5 euros would count as collateral for borrowing. And that's just a rough explanation. I think that's correct, but I'm not 100% sure if that's exactly how it works with the margin regulation at 95%. But if I understood it roughly, then out of $100 in strategy stock, you could only borrow $5 against it. So what happens now? Because these margin requirements are being raised, everyone has to sell their strategy positions since suddenly their collateral isn't enough anymore. It's kind of like when you own a property. If the property is valued 1-to-1 and it's worth $1 million, then of course you can take out a loan against it. Let's say you can borrow up to 50% and get a $500,000 loan. But if suddenly the real estate agent says the property isn't worth $1 million anymore, but now let's say it's only worth $50,000, then of course the $500,000 in loans you now have to pay off. That means you have to liquidate your property now so you can maybe restructure your collateral in a different way. You might have to get out of the property, get some gold instead, and maybe use that as collateral or maybe another stock or something like that. Or of course you'd have to put up more collateral, but that doesn't make sense if you'd have to put up so much more. So here, by changing the margin requirements, a slow sale would be triggered here from JP Morgan's side as part of their strategy. And now it gets even more interesting. Actually, I should have shown this video first, because now a few more exciting things are coming up here.
MSTR and the assault on their underlying asset, Bitcoin, by JP Morgan. So let's talk about the various aspects of that. First, they get short the stock, right? We know that happened because they didn't have the stock to deliver out to customers. So they're short the stock, they're motivated to have it go down, right?
JP Morgan is short on strategy because they've loaned out their stocks here, meaning the strategy shares. That's what you do to basically sell them short. Then you unload the shares and potentially buy them back later at a lower price if you expect strategy to drop. Because people wanted to have their shares delivered here, but it didn't work because JP Morgan doesn't have any shares left because they're short here since they've loaned everything out.
The leg of that stool is now they increased the margin requirement from 50% to 95%.
The margin requirements are being raised here. And the crazy thing is, like I said, it doesn't make sense because MicroStrategy doesn't have to sell any Bitcoin. They don't currently have any liquidation risk. They're still very, very far from their liquidation price. And it just fundamentally doesn't make any sense that these actions are now all coming together one after another in a coordinated way. So my conclusion is pretty clear. I wouldn't say it's 100%, but the probability that this is a coordinated attack is already very high. I'm showing you these things, but of course, you have to evaluate for yourselves how you see it. Are you going to let the panic shake you off, or do you see this as a good buying opportunity if you still want to buy Bitcoin? I'll put a link for you below to 21 Bitcoin, where you can buy Bitcoin almost securely. Use the code BitcoinHotel, you're very welcome to use it, to get up to 20% off the fees. Save money when buying Bitcoin, and I'll see you around. Peace out.